Hello everyone, it's me, NYSE Einstein from the Florida New York Stock Exchange. Looking a little crazy, a little woolly. June 25th, market in the red. I would say, almost everything in here is red. Russell down 30, Spiders down 40, that's huge. Oil off a half, that's small. Gold off 360, that's small. DAX, FTSE, Nikkei down. Transport's down 250. 6-to-1 volume down, volume versus up. Fascinating. You came in after a news-riddled weekend about trade wars and tariffs, about Mr. Trump's throwing out numbers in the 20 billions, the 200 billions all weekend long, potentially creating a very negative narrative and dynamic between the U.S. and China. When that festers and marinates over a weekend, it's like a mulling swamp in the dust of the Amazon River basin. We came in today. It was definitely a down posture. We're down $1.50. Market open, bounced back minorly, and then the narrative and the sell side and the crispy and the crumbles of the day started to coagulate. I guess it's my day of adjectives. The posturing became super negative. The market started to break. We started breaking through technical levels. Now, there is one overriding thing that came out in an email by Credit Suisse and Morgan Stanley about pension fund rebalances. So the S&P and the Dow are up 1.8% for the Dow, or the S&P, up 1.8% for the month, 4.7% for the year. The valuation of the equity marketplace and the stocks per se need to be adjusted by pension funds coming into the end of the quarter. This apparently will will create a sell-side posture of sell-side inequities of $33 billion going into fixed income and other financial instruments. I think this could be one of the overriding forces that forced the market to sell off as hard as it did. This market has had many opportunities to play into the crisp and the crumble of the trade war tariff situation between the U.S. and China. Though its headlines at best right now, it could be setting itself up for something worse than we expected, but we still don't know, and it is still negotiation. At the end of the day, we are now down 8 out of 10 days. We are down around the 24.2 level. The market feels like it's starting to break a little bit. There is a lot of red in this market. The dollar down, oil down, gold down, Brent down, Russell down big, Spiders down big, Dow down big, transport's down big. The VIX are up. So where do we go from here? Is this sell side coming into the end of the June going to be a reallocation of funds out of pension funds into fixed income, out of equities into fixed income into the end of the month, and then we'll catch our bid? Is the sell side going to be over tomorrow morning? We're going to bounce back. We were down as much as 500 and only closed down 330. So there was a bid in the market. It was a technical bounce. It felt like it. The sellers shorted, the shorters went home, and the buyers came back. The short covers came back into the market near the end of the day. All that being said, we've got a couple of scenarios on the table. The trade war will pan itself out to be something more serious, and the market will engage that, and we could go lower. This is partially fueled and catalyzed by this pension fund rebalance, and then when that is all said and done at the end of the month, fresh money coming in July, and we'll bounce right back up to 25,000. Or the scenarios that neither of those will happen, and the market will just catch a bid because it's an amazing market and it's strong and everything is good and interest rates are still low and corporate earnings are good and the economic data is pointing towards a solid recovery here. A lot of different choices. Many choices. Many choices. More money, more problems. More choices, more problems. Anyway, it's it for me. I'm done. I'm exhausted. It's Monday. Feels like Friday. I'm done for the day. NYSE Einstein. Inside Verse Off. Giddy up. I'll see you tomorrow.